Hello students, welcome to BYJU'S IES. On 21st September 2018, the stock market shed more than 1,100 points in a single day. Although the stock market recovered after that, the shares of the NBFCs as well as housing finance companies as well as mutual funds have been hit even today. The reason which has been cited for this particular decline in the value of the shares of these particular companies has been the IL&FS issue. So in this particular video lecture, let's try and decode this particular issue and analyze what is the impact of it. So in this particular video, the points that I'll be covering will be 1. Let's try and understand some of the concepts first, which will help us analyze this particular issue. Then we'll have a look at the ownership of IL&FS, who are the major stakeholders in IL&FS. Third, what actually led to this particular crash in the finances of the IL&FS? What actually has happened in the last 1 month? How the situation or the scenario unfolded in the Indian market? Then, what is the gravity of this particular situation? What will be the impact of this particular issue on the overall Indian economy? And finally, what is the way forward? So let me start with some of the basic concepts that are needed to understand this particular issue. First, understand this. In the financial market, basically there will be two branches. One branch is usually referred as capital market and the other branch is referred as money market. The difference between capital market and the money market is that in case of money market, the lending as well as borrowing will usually happen for a period of less than 1 year. Whereas in case of a capital market, the lending or borrowing will happen for a period of more than 1 year. Or else they will also mention that in case of money market, the capital flows will happen for a period up to 1 year, whereas in case of a capital market, it will be more than 1 year. But in case of money market, there are various other instruments which are issued. That is the scope of this particular discussion. In case of money market, one instrument is commercial paper, another instrument is intercorporate deposits, and some of the other instruments are repo rates, reverse repo rates, so on and so forth. To understand this particular issue of IL&FS, you need to understand the concept of a commercial paper as well as intercorporate deposits. Let me start with the first one, commercial papers. These are nothing but the instruments which are issued by company to the investors. But the major important feature of this particular instrument is 1. These are non-collateral or unsecuritized. What is the meaning of this? Whenever these instruments are issued, there is no asset which is supporting this particular instrument. Second, these will have a tenure of up to 1 year. And third, these are tradable. In simple terms, there is a secondary market available for this particular instrument. For example, company C sells a commercial paper of a maturity, let's say 3 months to person X or the investor X, but after 1 month itself, the X requires liquidity or money. So what X can do? Simply approach the market and sell it to, let's say, Y, who shall hold it for a period of next 2 months, then give it back to company C. So basically there's a secondary market available for the commercial papers. So these are the important features of a commercial paper. In simple terms, you can simply say that commercial papers are unsecured debt instruments which are tradable. Second one is intercorporate deposits. In simple terms, it is nothing but one company giving a loan to another company. I'll repeat it. One company giving a loan to another company. It could be a manufacturing company, it could be a trading company, it could be a financial institution. But essential concept is these companies should be registered under the Companies Act of 1956. That is the most important feature. After this, these instruments are not tradable. There is no secondary market available. But more importantly, the rate of interest charged on these kind of a lending or borrowing is usually very high. Those are the features of intercorporate deposits. Third one is the concept of a shadow bank. Usually in the market, you will see that the bank will lend to, let's say, an infrastructure developer. But in case of a shadow bank, these are the financial institutions or intermediary institutions which will perform the same services just like a bank, that is collection of money as well as lending the money. But only difference is these are referred as a shadow banks for a simple reason. These are not under the banking sector. These do not come under the banking sector. These are not regulated just like a bank. Usually in case of the shadow banks across the globe, the regulatory framework is very loose or very relaxed. Even in case of India, RBI regulates these particular shadow banks predominantly such as NBFCs, P2P, that is peer-to-peer lending, so on and so forth. But please understand, the regulations or the measures which are taken by RBI to regulate these particular institutions are much relaxed compared to what regulations an RBI has got on the banking unit. So basically, this is the concept of a shadow bank. Very recently, it has been there in the newspaper for a simple reason. IL&FS is also a type of a shadow bank, which is involved in collection of money as well as giving loans or financing. But basically, understand this, shadow banks were one of the reasons why the global financial crisis actually happened in the year 2008. Because these shadow banks usually invest in high risk assets or high risk projects. And whenever these particular investments backfire, there's a huge pressure or there's a contagion effect which will be created in the market. The same thing is being observed in case of India when there is a pressure on IL&FS. As per Financial Stability Board, it has stated that the high risk assets which are held by the shadow banks around the world or in the global market, which have the potential of disturbing this particular market, are to the tune of more than $45 trillion in the year 2016. And the same report also has stated that these particular assets or high risky assets are also increasing. Whenever these particular instruments work very well or these investments work very well, these will add to the growth or the development of the economy. But whenever there is a ripple effect that will be created, the contagion effect will be unimaginable. The best example for this particular issue will be the global financial crisis, as already mentioned. Next one is the concepts of rights issues. This is being discussed in the papers as one of the way out for the IL&FS. Now, what is the concept of a rights issue? Now, please understand, rights issue is nothing but issuing the shares or issuing equity to already the existing shareholders. I'll repeat the statement. Rights issues is nothing but issuing shares or issuing the equity to already the existing shareholders. But what is the difference? The difference between a normal issue of a share and the rights issue is that the ownership or the stakeholding of the existing shareholders will not change under the rights issues. Let me take an example. It will be clear for you. Let's assume a company X has issued 100 shares amongst A, B, C and D. And let's say A has purchased 10 shares, B has purchased 10 shares, C has purchased 30 shares and D has purchased 50 shares. Just hypothetical situation. Now, if company X decides to issue 50 more shares, then these 50 shares will be distributed in this particular fashion. A owns 10% of this particular company. So, out of 50, he will be given 5 shares. B, again 5 shares. C will be 15 shares and D will be 25 shares. So, in this particular fashion, the rights issues will ensure that the shares will be issued, but the ownership status will not change. So, this is the concept of a rights issue. And finally, the concept of a credit rating. Now, let's say X wants to borrow money from bank B. Now, on what basis should the bank B give loan to X? Whenever this kind of a lending or borrowing issue comes into picture, the lender will usually look at the credit worthiness of the borrower. In this case, X is the borrower. So, bank B is looking at the credit worthiness of the borrower X. If it is a retail borrower, the banks will usually look at the CIBIL score. But what if a company is issuing a bond, company is issuing a debenture, so on and so forth. When they issue bonds or debentures, it is also nothing but the concept of a borrowing as well as lending. In these particular scenarios, usually the investors look at the concept of a credit rating. Now, the credit rating is nothing but it's an indicator of the credit worthiness of the borrower. Higher the credit rating, higher the credit worthiness of the borrower. And it becomes very easy for this particular borrower to borrow from the market. This has been there in the newspaper, so have a look at the concept of a credit rating. Now let's have a look at the ownership of IL&FS. Right now, more than 1/4 of the ownership or the stake of this particular company is owned by LIC. That is 25.34%. The next owner or the next biggest owner or the promoter is the Oryx Corp, which owns 23.5% of the stake. Next is Abu Dhabi Investment, that is a sovereign wealth fund, around 12.5%. The next biggest is IL&FS, Employee Welfare Trust, 12%. Central Bank, 7%. India Discovery Fund, 0.86%. UTI, 0.82%. Others will be 1.77%. Left out are HDFC, 9%. SBI, 6%. Now, what is the importance of looking at these particular ownership status? Very recently, RBI has asked majority owners of this particular company to bail out the company. There's a talk of infusing the liquidity or providing short-term loans to the company by the promoters itself. Now, this is not the first time that this kind of a proposal has been given. Earlier also, the same company, that is IL&FS, wanted to go for a rights issue. But because of various problems, this particular rights issue was not conducted. But much before that, in the year 2014 itself, Mr. Piramal had offered to buy out this particular company of IL&FS. And the talks were being held. Mr. Piramal had agreed to pay a price of around 750 rupees for every share of IL&FS. Now, one day before the board meeting was supposed to be held, the biggest shareholder, that is LIC, came forward and said that they want nothing less than 1100 rupees per share. Now, as a result of this, Mr. Piramal backed out, walked away from this particular deal. Various experts today are saying that if the IL&FS company was purchased by Mr. Piramal, the situation would have not been so grave as it is today. Or this particular situation would have not even arisen if there was a change in the ownership status. So these are some of the concepts related to the ownership of IL&FS. Now let's try and understand what actually happened in case of IL&FS. What led to this particular situation of defaulting on the payments? Let's try and understand what are the background points. First, the debt to equity ratio was very high. Now please understand, either you will come across the term debt to equity ratio or else you will come across the term leverage ratio. Now what is a leverage ratio? It is nothing but how much debt has been issued with equity. Understand this? How much debt instruments or what is the value of the debt instruments which have been issued keeping equity as a base. What is the importance of studying the debt to equity ratio? Whenever a company issues a huge amount of debt instruments, the repayment liabilities will come after some period of time. The debt instruments could be short-term in nature or long-term in nature. But if the debt instruments are short-term in nature, such as commercial papers, then the repayment liability will be within 1 year itself. It simply means that higher the debt leverage ratio, higher will be the repayment liability on a company. And higher the repayment liability, higher will be the pressure on the finances of this particular company. There's a danger that you may take a loan, let's say in the form of commercial papers, but you will invest in an infrastructure project which will only give you a return after 5 years or after 8 years. But the one who has invested or given you loan will come and ask you for a repayment after 6 months. So basically it will lead to an asset liability mismatch. Now asset liability mismatch in simple terms is nothing but you borrow for short term, but you invest on an infrastructure project which will give you returns in a long term. This is referred as asset liability mismatch. Now look at this. The debt to leverage ratio or the leverage ratio for the IL&FS was around 12 1 year ago, and by the end of 2017-2018 it shot up to 18. In simple terms, there was a huge increase in the debt to equity ratio, which actually led to huge amount of repayment liabilities or pressure of repayment liabilities on this particular company. That was one of the reasons it defaulted on the repayment to SIDB. Second, the passage of LARR, Land Acquisition, Rehabilitation and Resettlement Act. One of the primary reasons why this particular company thrived, it was having a first mover advantage. That is, when Government of India started promoting the concept of a PPP very vigorously, one of the major beneficiaries of these kind of projects was this particular company itself. It started taking lot of infrastructure projects, started financing lot of infrastructure projects. But when Government of India passed Land Acquisition, Rehabilitation, Resettlement Act in the year 2013, it gave a doorway for compensation, more importantly, right and fair compensation to the landowners. As a result of this passage of LARR Act, it is said that the IL&FS company had to pay a huge amount of compensation to the owners of the land. How much compensation? More than 17,000 crore rupees worth of compensation was paid by this particular company for having acquired land. And in the recently published annual report of this company, they have cited LARR as one of the major culprits which led to overshooting of the cost of the projects. Third, shift in the strategy. When the company was set up in the year 1987, they basically opted to provide financing for these particular infrastructure projects. But over a period of time, rather than just financing these particular projects, they started owning these particular projects. And please understand, when you are a financier or a concessionaire under PPP model, you will just finance, operate, collect, let's say, tolls for next 20 to 30 years, then transfer the project to the government. But when you start owning the infrastructure projects, the risks you will be bearing will be much higher. As a result of this, it is said that the company borrowed heavily from both the banking sector as well as the money market, but could not repay because it has invested in the long-term infrastructure projects. Next, the over-dependence on the PPP model. Now, PPP basically stands for Public-Private Partnership. In case of PPP, what we expect is the government as well as the private sector will come together, use the synergies and develop the infrastructure requirements or take care of the infrastructure projects. Essentially, this particular model was promoted in the last decade for a simple reason. The infrastructure needs for India are very high, financing requirements are very high, but the government of India's finances are constrained. It cannot invest this much amount in case of infrastructure. For example, in the 12th five-year plan, we expected to make an investment of around $1 trillion only in infrastructure. But the fact of the matter is government of India cannot spend so much of money. So what government of India basically did was promote more and more PPP projects. But the concept of a PPP was what? The government as well as the private sector will enter into an agreement which is referred as Model Concessionaire Agreement, where government of India will take care of some of the issues as well as the private sector will take care of financing, building, operating and then transferring. But over a period of time, it was seen that government of India was expected to help the private sector in land acquisition. Government of India did not do that. Government of India was expected to give easy licenses or licenses in a timely manner to these particular private developers. It did not happen. Corruption practices increased even at the bureaucratic level. As a result of this, the PPP model did not have a very successful outcome in case of India. But the private sector, which was heavily dependent on this particular working of PPP model, was IL&FS. And when they invested heavily in these particular infrastructure projects, as a result of non-performance or government of India not backing up the requirements under the MCA, the infrastructure projects stuck up, the cost of production or the cost of these particular projects shot up, the revenues were stuck, and various disputes are even pending today in the arbitration, which are supposed to be done between the government of India as well as the IL&FS company. The value of the projects or the value of money which has been stuck up in the arbitration between government and the IL&FS, that is IL&FS, is demanding this much amount of money from the government is more than $90 billion. Next one is unviability of the infrastructure projects. On one side, government of India did not help these particular companies to acquire the land. these particular companies could not get easy licenses or clearances. And on the other side, the banks basically understood that there is some issues with respect to the finances of IL&FS. And from 2016 itself, the banks started reducing their exposure in terms of loans given to these particular companies of IL&FS. Now, as a result of this, look at this. IL&FS earlier used to borrow from a bank, let's say for infrastructure project, for a tenure of 8 to 10 years, whereas the infrastructure project tenure was, let's say, 15 years. Obviously, there is a mismatch between both these particular numbers. What this particular company used to do is, after the tenure of 8 to 10 years, they would go for refinancing from the banking sector, which will meet the required number of years to construct the infrastructure project. But from 2015-2016, these particular banks realized that there are some issues in the finances of the company and stopped refinancing as well as financing the infrastructure projects. That is when the IL&FS requirement of finances came to the fore. Now, already they have invested huge amount of money in this particular project. So what IL&FS did was basically borrow from money market instruments such as convertible debentures as well as commercial papers. But the feature of the money market instruments is that the maturity period is up to 1 year or less than 1 year. Whereas these particular infrastructure projects will take more than 1 year for this particular company to provide returns. As a result of this, the repayment liability went higher, the funds were dried up in the company, these assets became illiquid. What is illiquid? Any asset which cannot be easily converted into money or cash is called as illiquid. So the unviability of the infrastructure projects was one of the reasons which led to the crisis in the IL&FS. The next one is amount under arbitration. As already mentioned, IL&FS is demanding a huge amount of a payment from Government of India. But Government of India's opinion is that there have been huge over delays, huge increase in the cost of project, delays in delivery of the project. As a result of this, they will not be paying this much amount, they'll be paying substantially lesser. But any expert would tell you that any case when it is dragged to arbitration, the recovery will be only around 25 to 30% of the value which is being demanded. In this particular case, the experts are saying that at the maximum, if the IL&FS wins all the arbitration cases, the recovery rate will be only around 1,200 crores, whereas it is demanding more than 6,000 crore rupees from various departments of Government of India. So these are some of the reasons which led to the funds or shortage of capital in the balance sheet of IL&FS. Now let's try and understand how all of this particular issue unfolded in the month of September as well as it is continuing even today in the month of October. Now the genesis of this particular issue basically happened long time ago when the credit rating agencies started giving a very high credit rating for these debt instruments issued by the company IL&FS as well as its subsidiaries. For example, many of the debt instruments which were issued by this particular company were given a credit rating of AAA. And credit rating of AAA means it is the highest rated instrument in the market. And since it is the highest rated instrument, investors will be willing to invest in these particular debt instruments. So IL&FS on one side borrowed from banking sector as well as borrowed from NBFCs. But the difference between these two borrowings is the banks gave long-term loans, whereas various NBFCs have given short-term loans in the form of money market instruments. And since these are short-term instruments, these particular companies or NBFCs started going to the company IL&FS and asking for repayment. This particular company, which has taken the loans on short term, has invested on long-term infrastructure projects. In simple terms, there is an asset liability mismatch. And this company is yet to receive a huge amount of money from the Government of India as well as various other assets. So basically on one side, money is being demanded, money is expected by IL&FS, but right now they do not have money to give to the investors who have invested in the short-term instruments. This actually led to defaulting. What is defaulting? Let's assume here is a company which has issued a commercial paper of 3 months on 1st January. So after the maturity, that will be 3 months, it will be 1st April. On 1st April, the company has to repay not only the principal but also the interest rate to the investor. If they don't do that, we'll basically call this as defaulting. Now the company IL&FS owed a huge amount of money, that is around 1000 crore rupees to SIDBI, and SIDBI was expecting a repayment on these particular debt instruments. When IL&FS did not repay and defaulted on this particular debt, as well as IL&FS also defaulted on intercorporate deposits, that is when SIDBI basically approached RBI. And this is when all this saga actually started unraveling. Now look at this. IL&FS borrowed by issuing short-term instruments. When they defaulted, basically their credit rating was downgraded. Now it is said that the market intermediaries such as various mutual funds as well as NBFCs, which had a huge amount of investment in IL&FS, did not even realize that there is going to be a problem in this particular company. And they were caught unawares when there was sudden credit downgrading that was done to these particular debt instruments. That is when one of the biggest lenders or the investor in these particular commercial papers went to the market, sold them in the market at a very high discount. The stock market took a hit of more than 1000 points. Then the investors as well as the stock market took a hit, obviously for a simple reason. When investor was invested in a debt instrument, the company doesn't make a repayment and defaults on the repayment, it will also affect the stock market. Why? This particular default by such a mammoth company such as IL&FS will dent the investors' confidence in the market. And when it affects or erodes the investor confidence, the investors will not only withdraw their investments on the debt market, they will also withdraw their investments from the equity market. That is a precise reason there is a turmoil in the equity market as well as the debt market. Now, in this particular situation, RBI as well as SBI try to infuse the liquidity in the market. RBI conducted open market operations as well as relaxed SLR norms under FALL-CR. Whereas on the other side, SBI has infused liquidity or has proposed to infuse liquidity by buying certain assets from various NBFCs. Next, the government stepped in, filed a petition at NCLT under section 241 and 242 of Companies Act, which allows the government of India to overtake the board of any of the company which is under a lot of distress. The same section was also used by government of India back in 2008-2009 when Satyam scam broke out. So basically, government of India approached NCLT, filed a petition, and NCLT accepted the petition and issued an order in favor of the government of India. That is a precise reason government of India has replaced the old board of IL&FS and replaced it with a 6-member new board. And this particular 6-member new board has conducted various press conferences and has basically stated that they will try to reinstate or protect the value of the IL&FS. Next, what is the gravity of this particular crisis? What impact it will have on the overall Indian economy? Let's try and understand. One, the company is not just any ordinary company. Why? It has got the business in infrastructure financing. It owns infrastructure projects. It is involved in operations of infrastructure projects, so on and so forth. It has got more than 340 subsidiary companies. So this is not an ordinary company. So resolving this particular issue will be a mammoth task for the government of India. Second, majority of the borrowing done by this particular company is from financial institutions. The experts have pegged it at around 61%. Now what this will do is, already the financial investors are getting affected because of huge outflow of foreign portfolio investment. Upon this, if there is a crash in the market because a mammoth company which has borrowed is unable to make a repayment, the impact on the financial institutional investors will be very huge. Third, it will also dent the corporate debt market. It has already had an impact on the corporate debt market. Why? A company which was rated or whose instruments were rated at AAA, the highest credit rating, if they can default on the repayment, what is the guarantee that another company whose credit rating is, let's say, BBB, will be following their debt obligation? So it has affected the corporate debt market and it will further affect if the situation is not controlled. The total debt of IL&FS company as of now is more than 90,000 crore rupees, but only time will tell whether it is actually 90,000 crore rupees or the assets will not materialize and this will further increase. Next, in the next 6 months itself, it is expected that there will be a debt obligation of around 500 million on this particular company, which is a huge task considering the assets are illiquid. Next, infrastructure investment will definitely be affected. Why? Majority of these particular infrastructure projects are in the construction phase. They need a huge amount of loans for these particular projects, and this particular company has bid for various projects and is in the process of construction or developing these projects. If the company doesn't get quickly funding for these particular projects will come under pressure. Next, borrowings will become very costly for the other market players. Since the default has happened, the lending rates or the interest rates on the commercial papers as well as debenture market has kept on increasing. So these are some of the concepts. Let's try and understand what are the concerns or issues or the impact related to this particular IL&FS crisis. One, you will observe a contagion effect. As already mentioned, there has been an impact on the debt market, there has been an impact in the equity market, there has been an impact in the shadow banking, there will be impact on lending as well as borrowing. We have already discussed all these particular issues. Next, the government of India, especially the present one, has made a huge bet on the infrastructure projects. Now, the government of India has basically promoted huge number of roadways project, huge number of port project, has promoted a lot of civil aviation projects, and so on and so forth. But for all of these particular infrastructure projects, the main requirement will be one, land acquisition as well as financing. Already we have seen that the PPP model is not working very efficiently. The government of India's finances are constrained. Land acquisition is very difficult in India because of various issues. And upon that, the icing on the cake is the majority investor in India on infrastructure doesn't have sufficient resource to invest in the infrastructure. This will have a huge impact or will dent the investments in the infrastructure segment. Next, most importantly, this particular issue has raised doubts over the credibility of the rating agencies. It's a coincidence that just after 10 years or exactly after 10 years of global financial crisis, there has been a crisis or a mini crisis which has been brewing in case of India in the form of IL&FS. This reminds basically what happened in 2008. One of the reasons it has been stated as the cause for 2008 crisis is the credit rating agencies. The credit rating agencies at that point of time also had a very high credit rating of a triple A for various debt instruments in the market. So when the market crashed in USA, the investors who took the highest hit were these investors who had invested in the triple A rated debt instruments. We are seeing the same repetition happening even in case of India. So a question has been raised whether these credit rating agencies are efficient or not. Next, the government of India needs to have certain accountability. What were the reasons? Why were the independent directors quiet? Why were they silent? What were the auditors doing? The accountability as well as the transparency is one of the very important concerns. Next, the company, is it illiquid or insolvent? Please understand there's a huge sea of difference between both the terms. When the company is illiquid, it simply means it holds assets. Right now it is having assets, but the cash flows are not coming right now. They might come after 3 months, they might come after 6 months. So basically, that is the concept of illiquid. What can be the solution for illiquidity? Basically, provide funding for short duration. But whereas in case of insolvency, it simply means the liabilities are much, much higher than the assets, and there is no way these particular liabilities can be taken care of. And if it is an insolvent company, we will approach insolvency and bankruptcy code. That is what various experts are recommending this particular committee to do. They are simply saying this particular company, IL&FS, is insolvent. You cannot restructure the company. You cannot resolve this particular issue. You better simply refer this to insolvency and bankruptcy code. So these are some of the issues or the concerns related to the IL&FS. So finally, what is the way forward? Basically, I've divided the recommendations under two heads. What has to be done immediately by the committee of the government and what will be the long-term measures which have to be taken. Immediately, one, either the company has to bring in new investors on board by issuing equity, that is issue shares, collect the money, take care of these particular issues of short-term liquidity. Second, sell some of the assets which has already been proposed by the board, where they're saying they've identified around 20 plus assets which they want to sell in the market and collect the money, take care of the liquidity issue. But experts have stated that yes, it's a very good initiative to take care of the liquidity issue, but for the whole deal to begin, conclude, and the company to collect money, it will take around 18 months. How do you ensure the investors or even the government of India or even other stakeholders will sit quietly for the next 18 months? Or conduct a rights issue, which was already proposed, try it again, ensure that your own promoters will bring in the investment, ensure this particular liquidity issue will be taken care of. So in the short term, this could be done, or one of these particular could be done to overcome this particular liquidity issue. But in the long term, the important issues that the government of India needs to look at is one, we need to promote transparency, regulation, as well as accountability in the market. How did a big company such as IL&FS, which is a pioneer in infrastructure investment in India, end up falling into this particular situation? What was the role of the CEO? What was the role of other directors? Mainly, what was the role of independent directors? We need to hold it. The government of India needs to find out how come a big company such as IL&FS fell into this particular situation. When corporate guidelines are there, various provisions are there with respect to corporate governance, what was the role of CEO in this particular issue? What was the role of other directors? What was the role of independent directors? We need to promote the idea of a transparency, more regulation, as well as holding the people accountable for this particular mess. Third, Government of India needs to ensure there is a better regulation of these credit rating agencies. In many of these particular issues, one of the major culprits has been the credit rating agencies, because they give a very high credit rating to these instruments. The investors in the market will end up investing in these particular instruments. But when the market takes a hit, these will be the investors who are majorly hit because of this particular credit rating. So basically, we need to have a better regulation of the credit rating agencies. Next, Government of India needs to have a look at the economic offenders again, take care of these particular economic offenders by providing a stringent mechanism to punish all these economic offenders. The next one is we need to have a relook at the investment policy of LIC. Various experts have criticized that Government of India uses LIC as a scapegoat to subscribe or to invest for any of these particular securities in the market when there is a no purchaser or a buyer in the market. For example, LIC has been asked to invest in IDBI Bank, which majority of the experts feel is a very bad decision. Why? For a simple reason, LIC collects money from a common man in the form of insurance premium and makes it in the form of investment in these particular companies. Now, IDBI is already a very weak bank. What if this particular company or the bank undergoes bankruptcy? The investor's investment will take a hit. But the LIC has not invested out of its own pocket. LIC has invested from the money which is collected from the common man. The same thing has happened even in the case of the IL&FS. 25% of the IL&FS is owned by LIC. And now this particular company has taken a hit. As a result of this, the investments of LIC also have taken a hit. The Government of India needs to have a relook at how they are going to use the investments of LIC. Because at one point of time, it may so happen that majority of the investments of LIC may turn out bad. And the impact of that on the Indian economy will be disastrous. So these are some of the recommendations that the Government of India needs to have a look at and ensure that the issue of IL&FS is resolved in a fair, transparent and a quick manner. Thank you.